Derivative use of Turkish investment funds during the 2008-09 financial crisis. This article is written by two authors. First author Burak Burgip. Second author Aslihan Tasdemir. Contribution and originality of the study is that this study contributes in the existing literature in not only being the first study in Turkish capital markets that tries to explain derivative use in investment funds, but also being one of very few studies which investigates the role of derivatives in portfolio management throughout the 2008 to 2009 financial crises. This paper centers on the question of how derivatives were utilized by investment fund managers in the course of 2008-09 global financial crisis. In this vein, we analyzed investment funds defined as mutual funds and investment trusts, by comparing them in terms of derivative use under three fund categories. With respect to 193 investment funds, our first categorization is investment objectives, and our results show that the 43.40%, 22.12%, 51.85% of the funds invested in only equity, bonds, both equity and bonds, use derivatives. Secondly, in terms of their legal structures, we find that 56.67% of the closed-ended and 27.61% of the open-ended funds use derivatives. In the final category, that is fund type, it is observed that 51.89%, 8.03% of the A-type, B-type, funds use derivatives. We proceed with logic analysis in order to identify the relation between a fund characteristics and derivative use. We find for each category that the likelihood of derivative use increased as the turnover of funds escalated. Furthermore, we make univariate analyses to compare distributional parameters between derivative users and non-users. In terms of investment objectives, users having bond-dominated portfolios had higher standard deviation, idiosyncratic risk and skewness, while those of non-users had higher beta and timing beta. For the structural categorization, users significantly had higher standard deviation, idiosyncratic risk and skewness, and yet non-users had a higher beta and timing beta. In case of fund type, non-users had a higher beta yet a lower kurtosis. Lastly, we apply regression analyses to test relation between risk change and funds' previous performance. The empirical results indicate that there was a negative relationship, which was weaker for derivative users. Thanks for watching this video of Asian Economic and Financial Review Volume 7 Issue Number 1. Derivative use of Turkish investment funds during the 2008